Okay, fine. So what
Just
I
completing
will
it and
do
putting it on. Sir?
I will try completing little early so that we can spend more time on the questions. In between chapter to other chapter, if there are questions also, we will see if we can take up. We'll take up.
Sure, sure. We are live now. Good evening to one and all. Welcome to day 2 of the GST training program for commerce faculties of various colleges. This program is conducted by the Bangalore branch of SIRC of ICI, that's Institute of Chartered Accountants of India, in collaboration with the Department of Commerce, Government Ramnarayan Chandram College of Commerce and Management, Bangalore. I would first like to introduce the panelists. I would like to welcome them, CA Venugopal Gella, Dr. Swaminathan, Dr. Ejaz Ahmad Khan, and Mr. Sudha Madhuraj. Thank you for being here, sir. Today we have going to discuss a very interesting topic in GST that is going to deal with the different introduction of GST, type of tax, meaning and scope of supply, types of supply, and exemptions in GST. To take us through this session, we have one of our eminent chartered accountants, CA Venugopal Gella. It gives me great pleasure to introduce him. CA Venugopal G is a partner in Messrs. Venu and Vinay Chartered Accountants. He qualified in the year 2002 by securing an All India 45th rank. He is also a certified information security auditor. He has also completed various other certificate courses from Institute of Chartered Accountants of India, like DISA, a course on business valuation, course on internal audit, course on fraud detection and forensic audit. He has also completed a one-year course from the Indian Institute of Management on data analytics and business intelligence. He is an active speaker at ICA on GST, especially on technology and its implementation challenges. He has addressed many forums on bank branch audit, both for members and students, especially the audit under the CBS environment. He has conducted hands-on workshop for members on use of Excel in bank branch audits. He has built a lot of utilities in audit using Excel when GST was implemented. He has developed a lot of Excel-based free utilities on GST, like the JSON reader, creating JSON files, GSTIN validator, composition versus regular benefit analysis, GST impact reader, and various others. His major areas of practice are design and development of internal controls and process documentation, GST implementation and integration of accounts and return utilities, consulting in ERP implementation or migration, management consultancy for business analytics and growth and design of management information systems. Apart from audits, he's a hands-on coder in VB.NET, R, and Python. He also reviews database design. He has conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He was the man behind the development and managing of cloud applications like Tax, Smile, Insta Financials, and various others. He is a man very familiar to all of us chartered accountants and has mentored various young professionals. Over to you, sir, to enlighten the audience.
Thank you very much.
Another small announcement, participants. Sorry, wait a 1 second. You can post your questions in the Q&A section, participants, and at the end of the session, we will be answering them. Thank you very much. Over to you, sir.
Yeah. Screen is visible, right?
Yeah, it is visible, sir. I think Dr. Ajaz has something to say. Dr. Ajaz, would you want to, I think you're muted, Dr. Ajaz.
Hello, it's a request to you, sir. Please share these slides with all the participants. So somewhere it will be useful to them.
Absolutely, absolutely. I'll be sharing it. So Rajesh, we will find a method to share it to them.
Yeah.
Okay.
Dr. Ajaz, you can drop me your mail ID. We will share it.
Yeah, thank you. Thank you, sir.
Right. Firstly, I'm thankful to all the organizers for taking up such a wonderful program on GST update to all the faculties. And it's also a privilege for inviting ICA and on behalf of ICA, including me as one of the co-speaker for this session. So today's session is on introduction to GST, basics of supply, levy, and exemptions. To all other fellow faculty members, okay, I'm also a faculty on this subject, and it's very heartening to be part amongst you in discussing. I would say that rather than explaining it, because most of you have been teaching on this subject. So for some of you might be new taking up GST subject. Some of you have already been taking up GST subject. So we might have participants under various at various spectrum ends of the spectrum. The way I have structured the session is I would be covering on the basic side of the various aspects. However, feel free to interact on various questions that you have that you get up. Surely drop up in the question. So between each section to another section, I would be taking over those questions. And let's keep it more interactive and have it more questions so that everyone get enlightened about it. And yesterday, very beautifully, Madhukar sir and Jatin sir has summed up as to reason for existence of indirect taxes and reason for GST coming in. So I have also covered all those aspects very briefly, and we will be focusing more on the basic levy, something called which is levy. Okay. So whenever we are talking about GST, a legislative framework, there are various acts one have to consider. Don't get worried that, okay, there's too much which is there on the screen. It just, I would say, copy replica. Every state has SGST Act. So GST is not a one act. GST is a unified version, both center and state coexist. If there is an amendment which has to happen in an act, that has to happen by each of the state. So we have one CGST, Central Goods and Services Tax Act. Then we have IGST, Integrated Goods and Services Tax Act. Wherever we have union territories, it is UTGST, respective UTGST. Wherever there are states, it is respective SGST. While I am in the state of Karnataka, Bangalore, I am here, I will be dealing with KGST, Karnataka GST Act. Likewise, each state has one act. Alongside, we have GST compensation cess. Now, yesterday someone was asking whether tobacco has a levy or not. No, tobacco products have, along with the GST, there is a levy of compensation cess. So that is one side of the law. Then every time when you read the act, there would be a reference to the rules. There would be various rules. The reference of the rules would be given. Now, when the reference of the rules are given, so we have again CGST rule, IGST rules, SGST, UTGST. So there are act plus rules. Now, most of the provisions of the law are notified. Basically, some section has to come into effect. So something to happen, there would be notifications. There are two types of notifications that would exist. Anything that is changing the rate of tax, anything that is changing the time of supply. So something to do with the rates and related procedures, the notifications are CGST rate. But if a notification has to change or notify some of the procedure, like whether one has to register or not register, the notification would be central tax. So you have other than rate and rate related notification. After the notifications, what comes is circulars. Now, how do we read or interpret or understand circulars? Is if there is a clarification of some item, such a clarification is brought through circulars. Circulars is an explanatory notes given by the CBIC basically to the officers in a smooth and structured way of implementing various provisions of the law. That is on circulars. The last thing is orders. Whenever there is no time to amend the act, whenever there is no time to amend the act, by way of a special powers they have, they will bring an order which has to be read as if that is an act. Again, within 6 months from the date of the order, this would be tabled in front of the parliament or the state legislature It would be tabled in front of the parliament or the state legislature, and it would become into the get amended and approved. So this is the broad framework within which GST will work. Now, so when GST came in, the questions have is like, why at all this GST? So what happened to the existing provisions? So let's look at that. We call GST as a destination based or consumption tax. Now, why do we call this as destination based consumption tax? Because it is a levy, and the levy is done by the state which is receiving the goods or services. So if someone is selling, generally we call this as a replacement of the sales tax. But if someone is selling, so there is no sales tax, but it is a tax on consumption. I will explain again in detail, but right now just understand that it is a consumption based levy. The next thing one has to also know is this is applicable to whole of India, including Jammu and Kashmir. Most of the provisions, various acts, when we read, we say this is applicable to whole of India, excluding Jammu and Kashmir, but this is including Jammu and Kashmir. And the levy is dual levy. There is some levy of state, there is some levy of center. Most importantly, GST law is called as compliance-based law. Why do we call it as a compliance-based law? Because the whole of the return filing mechanism, GST returns which needs to be filed, they have been so complicated, or they have been so beautifully drafted so that all the provisions have been included in. Next, from return to registration to assessment, everything is purely over the technology through the portal. We call it as a common portal called GSTN. Through that, the whole of the process happens. Now, certain taxes which have been taken out after the GST coming in, that's where we call it as dual levy. Prior to the GST, major revenue to the center was excise duty and service tax, and the major revenue to the states was VAT or sales tax. Now these taxes got subsumed. So after the levy of it, these taxes have been like removed. What did center remove? Center has removed excise duty, additional excise duty, and excise duty, which yesterday Madhukar sir was mentioning about the introduction on the toiletry and medicinal equipments, even that is removed. When I import the goods into India, to protect Indian manufacturers, the customs used to levy a duty called CVD, countervailing duty, or SAD, special additional duty. So to the portion of excise was one CVD, then the portion of VAT, it was SAD, so that there is a level playing field. I procure in India or import, the tax wise it should be the same. To have that levy used to happen. Service tax, which was predominant, everyone knew, that is removed. Then central surcharges and cess, that was also removed. From the state perspective, what has been removed is VAT or sales tax, because some states had sales tax, some states had VAT. Then entertainment tax. Please note, entertainment tax, there are two types of taxes. There is a tax levied by a local body. There is a tax levied by the state. Whatever levied by the state is moved out. If there is an entertainment tax levied by, say, panchayat or municipality, that would still exist. Luxury tax, basically this was levied to a lot of hoteliers on the accommodation services and other activities. Then taxes on lottery, betting and gambling. Octroi and entry tax, this existed in some of the states, especially Maharashtra, West Bengal, those states had. Purchase tax, tax on advertisement. Then state surcharge and cess, like central surcharge, state surcharge and cess has been removed. Alongside, CST has also been eliminated. CST was levied by center, but the collection used to be made by states. So predominant of indirect taxes have been removed after the introduction of GST. What still continued is basic excise, basic customs duty. So if you are importing something to India, you still have to pay customs duty. That is not removed. Then the levies that happen on alcoholic liquor for human consumption. So whenever a liquor is produced, you have excise. Whenever it is sold, the VAT that is there, the sales tax that is there. So those levies are still there. So can I still say that excise and VAT and other things are there? They are there. It's not that the entire thing is not removed. They are there for those goods which are not covered under GST. Then stamp duty, which is state levy on the property tax, that is there. Toll is there. Mandi cess, which is levied by the local authority, is there. Profession tax, which is again levied by the states for setting up any business establishments or on the employees. Motor vehicle tax, entertainment tax on the local, levied by the local bodies. These are the taxes that are continuing. Then there are 5 different petroleum products. They are covered under GST, but the levy is deferred to a future date. Still, it is accepted by the states. It is not brought into the levy of GST. So on petrol, diesel, all these products, still the sales tax is applicable. The central, the government taxes are applicable. These levies are still there in spite of GST being there. But substantially, all indirect taxes have been removed. So let's understand what are the various types of taxes that exist in GST. Broadly, the majority to know, we have 3 types of taxes that exist: CGST, SGST, IGST. Central goods and services tax, state goods and services tax, and integrated goods and services tax. If a rate of a product, if we say 5% or 12% or 18%, what we are talking is that as an IGST rate. What we are talking is IGST rate. If it is sold locally, that is within the state, we will be levying 2 taxes, CGST and SGST. If the sale is happening from one state to another state, we will be charging IGST. So there is an integrated goods and services tax or central goods and state goods services tax. Why this differential levy? Is just for the accommodation of split of taxes between states and the center. Whatever is the SGST collection straight away goes to the states. Whatever CGST is collected, 42% is retained. Then again, it is distributed back to the states on a agreed compensation formula for a period of 5 years. That is also distributed. So just for the ease or economic operations, we have these levies, but all are called as GST only. They are to be treated as GST only. Now, if I have to say which taxes got merged under which, the excise, additional duty of exchange, service tax, surcharge, all this got merged to CGST. The state side levies, VAT, purchase tax, luxury tax, entry tax got merged to SGST. The IGST would include CST, CBD and SAD. So when the compensation is distributed back to the states, all the states have a revenues under these different collections. So accordingly, a proportion has been derived. And whenever it is the tax has to be distributed or allocated, it is allocated in this format. So how do you determine what levies to be done? If there is a supply, I will come to what is the supply. The whole of GST revolve on one topic called the supply. If there is a supply made within the state, if there is a supply made within the state, we call it as intra. If there is an intra-state supply, we levy CGST and SGST, and it is equally distributed. If we say rate of tax is 18%, then CGST is 9%, SGST is 9%. If the rate of tax is 5%, CGST is 2.5%, SGST is 2.5%. Whatever is the rate of tax, including we have a rate of tax of 0.1%. For an item of 0.1%, the CGST will be 0.05%, SGST would be 0.05%. So CGST and SGST would be 100% equally divided. That's how the rates have been derived. And do the power is there for the state to determine any rate? The answer is no. The rates have to be unanimously be approved by GST Council. GST Council is kind of a quasi-jurisdictional body which takes the decisions on the matters of the GST. This is a council formed by Union Ministry of Finance, Finance Minister, all the ministers of the state finance or a representative of the state. So everyone are forming part of the GST and council. And any decision that has to happen, 2/3 of the people have to approve any decision. Only then something would happen. So there is again a robust, well thought process have been designed for the functioning of GST and council also. Let us come to the main important aspect of GST, that is supply. So just before that, let's see if there are any questions. I will see the questions and we will move to the next item, which is supply. Okay. So there is one question. What about UTs with legislator SGST or UTGST? So wherever UTs are there, it would be CGST and UTGST. And wherever the states are there, it would be CGST and SGST. Then question from Rohini Madam. What is the impact on inflation in this country since the implementation of GST? This is more on an economic question, but I would say the price of the product has come down after the implementation of GST, because there is a concept of seamless input tax credit, which was there in the VAT regime. Beautifully, yesterday Jatin sir was explaining that the levy on indirect taxes could be a levy on the profit margin to get a value added, or a levy could be on the total turnover. For example, I am dealing, let's say I am dealing with an instruments on computer, like say mouse and other items, and the rate of tax for it is 18%. I buy them at, let's say, at 100 rupees, and I would keep up a margin of 10 rupees. When I am purchasing them, I have purchased it at 100 rupees, plus I have paid 18 rupees GST to the supplier. From my cash outflow, I have paid 118. I want to have a margin of 10 rupees. I wouldn't add 10 rupees to 118 and sell it at 128. I would be selling it at 100 rupees as my cost, plus 10 rupees is my margin, 110 rupees into 18%, which is 19.80 as a tax. So total sale value would be 119.80. That is the price at which I will be selling to the end customer. If there was no seamless input tax credit, there would have been cascading effects. Earlier, also we had this concept of sen VAT credit, VAT credit. There wouldn't have been any cascading effect. So how can you say there is a reduction in the inflation or the product price after GST? In fact, government definitely had the cognizance that the price of the products have to come down. They have introduced section 171 anti-profiteering, saying that please relook at the prices. Why am I saying this? Let's take a simple example. I am a chartered accountant in practice. My output liability is service tax in the erstwhile regime. In the course of conducting the audit, I purchase laptop, I purchase computers, I purchase some stationery, I purchase some furniture for my office. While I procure all these materials, I used to pay a sales tax or VAT. My output was service tax, purchase was VAT. I was never getting input tax credit. These taxes was getting loaded as a cost. These taxes were getting loaded as a cost, and there used to be inflation to the price of the product. But now, when I procure this, I would be paying GST. When I am selling my services, I am paying GST. So there is seamless input tax credit. While I am doing an activity of service and paying service tax, say I am going to a trader and doing an audit of his accounts and giving him an audit bill. So earlier we had this 15% rate of tax, service tax. So if my bill was say 1 lakh, I used to charge 15,000. This 15,000 used to be a cost to him, but now it is no longer a cost to him. For him, this 15,000 is an input tax credit. Now people may say the rate of tax has gone up. From 15%, it moved to 18%. Did it not increase the inflation? The increase, even though there is an increase that happened, but the quantum of input tax credit that was available and that is available is offsetting this. And I would say there is not much inflation owing to implementation of GST. In fact, there is a lot of transparency in the country. Today, if you ask what is our indirect taxes collection, every common man knows that roughly around 1 lakh crore every month we collect because of GST. These statistics are available. The same answer, if it was prior to the GST, do we know how much revenue we were collecting on indirect taxes? No. There was no transparency. After GST, we have a huge transparency. Even today, we cannot pinpoint and tell how much is the VAT collection on petroleum product, how much is the excise collection on this liquor. We do not know because that is again state subjects and various things. So in my personal view, GST has brought down the inflation in the country and brought a lot of transparency to the system. Okay. Question from Syed Babu sir. Can we charge GST and VAT for a single supply? Now there is no longer VAT. As I said, after the implementation of GST, there is no longer VAT, excise duty, service tax. A product, we do not accept that liquor, alcoholic liquor for human consumption and petroleum products, leaving that there is no VAT that exists in the law. Okay, let's move to the next topic, which is on supply. Now, as I said, the whole of GST revolves on this single word, supply. Now, what is supply? In a plain layman terms, I would say read it as a sale. Now, legal language is different, but plain layman terms, read it as sale. If as a chartered accountant, I am providing some services, those services are to be treated. Those services to be treated as also a sale, so that there is a supply. That's how we have to read it. Now, if I have to talk about the concept and nature of the supply, a very important from here on, wherever any section number in the rest of the coming days, wherever someone is talking about any section number, please read that section number as section of CGST Act. SGST and CGST is a mirror replica. IGST is whenever an IGST is spelled upon, they would specifically say this is a section of IGST, but otherwise whenever we are talking about any section, it is a section of CGST Act. CGST Act is divided into various chapters. So section 7 of the CGST Act deals with this word supply. Now, this is the section 7. I have broken into various parts so that we can easily understand what is a supply. The word supply, please note, the word supply is in the nature. The word supply is in the nature of sale. It is in the nature of sale. And you all know, when someone is selling something, they will be selling for consideration. They will be selling it for consideration. So the supply has to happen only for consideration. If there is no consideration, then there is no supply. Owing to COVID, we know a lot of people are involved in doing a charitable activity. So they purchase oxygen concentrators, then they're giving it to hospitals. Is it a supply? Yes. It's like they have purchased it, it is a cost, they're giving it, it is like a sale. But there is no consideration to it. Whenever there is no consideration, it should not be treated as a supply. Whenever there is no consideration, it should not be treated as a supply. There is an exception to it. The exception is Schedule 1. I will come in a while. But in a general parlance, there should be a consideration. There should be a consideration. Next. Mere having consideration itself is not sufficient. Mere having consideration itself is not sufficient. It should be in the course of business. It should be in the course of business. For example, if I am a salaried employee, if I am a household, I am selling my old motor vehicle, I am selling my used jewelry. These are being sold. They are not in the course of business. We all know there is a threshold limit for registration, which is 20 lakhs for goods and services and 40 lakhs for only goods. Now, if this threshold limit is exceeding, one has to register under the GST. But the question to the threshold limit has exceeded or not is to be seen whether the activity which I am doing is for business or not. I had some Mercedes Benz. I am selling it for 50 lakhs. Just because it exceeded a threshold, Mercedes Benz is a goods, because something which is tangible, you can touch, feel, move, everything. So does it mean that I have to pay GST? Answer is no. It has to be the course of furtherance of business. If it is not for business, again, no GST. There is only one exception to tell you. So primarily, the first line has to for people to understand, for 90% of the cases, for a supply to happen, there should be a consideration. This consideration should be in the course of furtherance of business. This consideration should be in the course of furtherance of business. The next thing which is also very important for supply is an inclusive definition. Supply is an inclusive definition, and it includes these adjectives: sale, barter, transfer, lease, license, exchange, rental. So any of these adjectives, which are, when an act happens, this becomes a verb. It is an adjective for understanding, but when an act happens, it becomes a verb. So let's take another simple example. I am exchanging a phone with an old phone with a new phone. For example, I have exchanged, if I say I have exchanged my iPhone, this is an old iPhone. I have gone to a store. They said, okay, for this phone, I will give you 10,000 rupees. I said, okay, don't give me 10,000 rupees. Give me, say, 10,000 worth button phone or whatever phone. I gave my old phone to a new phone. To the storekeeper, to that outlet holder, retailer, did he get the money? Answer is no, he did not get any money. But is there a sale happened? Yes. So is it with consideration or without consideration? The answer is it is with consideration, but there happened a barter. There happened a barter. So the consideration can be in money or an equivalent form of monetary equivalent of that transaction. So for something to say a supply, these have to be fulfilled. Please note, if there is no supply, no GST. So happening of supply is must in GST. Now, what is the exception for not in the course of furtherance of business is import of services, So if a party, if someone is availing services of importing any services, then it has to be treated as if there is a supply that exists. Next limb that comes is transactions without consideration. Very important, the transactions which are happening without consideration. What are the transactions happening without consideration? For a moment, ignore in the course of furtherance of business or others. First, transactions between a related persons or a distinct person. Let's understand this related or a distinct person. After the implementation of GST, even though it is one nation, one tax, we call it as one nation, one tax. After the implementation of GST, the levy has been state specific. The levy has been state specific. So it is one country divided between states. So between one state to another state, you should treat it as one country to another country. Why am I saying? Because the states have foregone their levy of VAT and other aspects. So a movement of goods from one state to other state will attract GST. Let me give you a little more example. I am a dealer, or let's say I'm a manufacturer. I'm a manufacturer of, let's say I'm a manufacturer of mobile phones. I have a manufacturing unit in Bangalore, Karnataka. I manufacture these mobile phones. Where do I sell? I have outlets across India and I sell in those outlets. I manufacture here, send it to Kerala, Kochi. I'm sending it to Chennai, Coimbatore, Tamil Nadu. I'm selling it to Telangana, Hyderabad. I'm sending it to Vizag, AP, Bombay, Maharashtra, Kolkata, West Bengal. I'm selling it to all those locations where I have showrooms. From that showroom, I am making a sale. Where is the GST has to be paid? Wherever the showrooms that are being sold, wherever that showrooms that have been sold, the GST has to be paid. Okay. What about the transaction, the production that happened in Karnataka? The production that happened in Karnataka also has to get the revenue and the levy. When the goods are moving from my manufacturing unit of Karnataka to Maharashtra, even though it is my own branch, even though like whole of India, I have a single bank account, everything is single. They are all my branches, even though they are branches. For the purpose of GST, we call them as distinct persons. We call them as distinct persons. So GST has to be paid. So whenever I'm moving the goods from here to Maharashtra, I am not going to collect because I'm not selling. They are the one who is selling. But for the purpose of GST, it is deemed as a sale. And even there is no consideration, one have to pay the taxes. Likewise, the next thing is import of services from a related person or an establishment. The above import of services is for consideration. But look at here. I am here in India. I have a parent office in US. I have a parent office in US. Let's take a simple example, Samsung. Now, Samsung is manufacturing the mobile phones and they're bringing it to India. I am selling it here in India. I have entered into a contract that, okay, after the sale happens, since the parent company is somewhere in Korea, so the profits have to be transferred there and I have to incur some expenditure here, all those things. So there is an arrangement that the parent company will do marketing spends. The parent company will give me a know-how to set up a unit. So there are some services that are happening between the parent and the subsidiary. Or for conducting a business activity, we need computers. No computer can work without any software. I need Microsoft license. These licenses are being procured by the parent. I am using it. So there are various things I wouldn't be paying money for. At least they are crossing the customs frontier, they are visible. But what about services? So they said, so include services wherever there are services availed without consideration, please treat it as supply. The next thing is, if you are availing any input tax credit, then you are supposed to pay GST when that good is disposed of without consideration. When you are disposing the goods, you have to pay GST. Let us give you another example. The charitable institution, the oxygen concentrator, which I said, I have purchased it for my employees in the office. But however, owing to COVID, I decided to give it to a hospital. No monetary considerations. But I have taken the input tax credit on this machine when I have purchased. Having taken an input tax credit, if I'm disposing of any business asset, if I'm giving it off freely to someone, I have to treat it deemed as if it is a supply and I have to pay GST on that supply. The last transaction, similar to the distinct person, principal and an agent. Principal and an agent. What is this transaction? Generally, like I am manufacturing mobile phones and giving it to my branch in Maharashtra, rather than setting up my own unit, what I do, I create agents. We have different types of agents. And the agents could also be procurement agents, whatever. There are different types of agents. Under GST, whenever there is a transaction between a principal and an agent, it is expected to be treated at an arm's length independent transaction, even though there are no commercials involved other than commission. Generally, agents get a commission while he sells that mobile phone. Let's say the commission, including Dell credit commission, whatever, let's say the manufacturer is giving him 15% commission on the sales. For the purpose of income tax, for the purpose of books of accounts, for the purpose of my accounting, consignment accounts, whatever, I record only 15 rupees as my income. But when it comes to the GST, for the purpose of GST, I should be treating 100 rupees as sales, 85 rupees as purchase, 15 rupees as profit, and GST has to be computed on 100 rupees and not 15 rupees. So friends, I'm sure now you got a fair idea of what is a supply section 7. and an important aspect under GST, which will actually make us a clarity that, okay, if there is a supply, then there is a levy. No supply, no levy. Let me erase this. Okay. There are actually 3 schedules along with section 7. We have seen schedule 1, which is deemed as a supply. Let's move to schedule 3. Here, these are the, in fact, if you see schedule 1, they are not an activities of supply, but they are deemed as a supply. Likewise, schedule 3, these are a supply which fulfills the elements of section 7, but they have kept outside the levy of GST. First, employer-employee relationship. What is an employee doing? Employee is also providing service every month, for which he is paid some consideration in the nature of the salary, in the name of salary. You may argue that it is not income from business, it is income under salary. That is under income tax, sir. For the purpose of GST, there is no segregation between capital gain, other income, rental income, business income. I think all income is one income. So the moment you are earning something, you are making a supply. Theoretically, employee is providing some services to employer, but the intention is not to levy. So what they said is employer-employee is a relationship, we will keep it outside. Please note, service provided by employee to employer is outside, but a service provided by employer to employee is well under the levy. What does that mean? I am an employee, I'm drawing a salary of 50,000. In 1 month, there was an offer. Okay, I'm the manufacturer of this phone, so they have given an offer saying that, okay, we will give 25% discount to employees. So instead of paying salary in 1 month, they gave one mobile phone. That is not outside the levy. That is a service by or supply by employer to employee. It is inside the levy transaction. Then the services by court and tribunals. So we pay court fees and various other things. So they are outside the levy. Then services of a crematorium, funeral, mortuary, or the transportation of these deceased, these are outside the levy. Sale of land and building, it is subject to stamp duty at this point. That is also kept outside the levy of GST. Then actionable claims other than lottery, betting, and gambling. What is an actionable claim? So it is something which is a right that is arising. So a voucher. You go to Sapna Book House. You buy some voucher, right? Now it is basically you are paying 5,000 in advance. You are getting that voucher. Whenever you are buying the books, some items, you will go and give this voucher that is redeemed. So when the Sapna Book House is getting that 5,000 rupees and giving you a voucher, technically that is a sale. It's an actionable claim. They are getting it. But even though there is a claim, since it is not redeemed, so that levy is deferred to a future date. So hence actionable claim is kept outside. But the actionable claims for lottery betting. So whenever you are buying a lottery ticket, so the if you are winning, you will be getting the prize, bid price. That is why we call it as a claim. So those are inside the levy of GST. Then the next thing is if there is a supply happening from a non-taxable territory to a place in a non-taxable territory. So which is we generally call it as high C sales. So I am here in India. I have a customer in Singapore. He wanted me to supply some mobile phones. So what I have done, I do not have a manufacturing right now happening. I found a manufacturer in, say, Korea. He's agreed to ship me. Instead of me getting it to India and giving it to Singapore, I have told my Korean vendor to ship it to Singapore. So transaction is completely happening outside the taxable territory. Taxable territory means jurisdictions of India along with that 14 nautical miles. So basically the landmass and the waters, that is the territorial waters, that is covered from the levy of the taxes. So if a transaction is happening outside the taxable territory, there is no GST. So items which are listed in Schedule 3 are not to be considered as supply of goods or supply of services. So section 7 was levy, schedule 1 was the deemed supply, schedule 3 it is not to be considered as supply. Now we have left in between one schedule, that is schedule 2. So let's look at what is schedule 2. Schedule 2 is classification of goods or services, or the classification of goods or services. Even though the goods and services are defined, the classification of goods or services is also important, because the power has been given to the government by way of section 7, subsection 3. Government has a power to classify certain things as goods even though it is service, or classify it as service even though it is goods. Now let's understand what is that we are trying to look at it. Let's simply look at first the definition of goods and services. To subsection 52 of the Act deals with the definition of goods, which says goods means every kind of movable property other than money and securities, and which includes actionable claims, growing crops, grass and things attached to forming part of the land, which is agreed to be severed before the supplier under a contract of supply. So primarily they are saying goods means something which is movable property. Services, let's look at the definition of services also. Services is defined under 2102. Section 2 of the any act deals with the definitions. We are well aware of it. 2 subsection 52 talks about goods. 2 subsection 102 talks about services. Services is even more beautiful definition. What is services? Services is anything other than goods. So that goods is a means where we have different types of definition, inclusive, exclusive. So anything which is used with the words means, it is a specific, you have to be with that. If it is means and includes, it means likewise. And whenever we have exclusive definition, which means it is the outer limit. Like if I have to use that Venn diagram in our probability thing, so that's how we have to read what is the scope. Now, what is the scope of service? Service means anything other than goods. So if you have some income, I will say a right word is if you have some supply, and if that supply is not goods, then that supply is services. So GST, nothing can escape GST. Nothing can escape GST. Either it would be a supply of goods or it would be supply of services. Why is it relevant? Why is goods and services still relevant? Yes, it is still relevant because there are various provisions, maybe from refund perspective, availment of input tax credit, or looking at inverted duty structure, various cases. So you need to know classification. Generally, there are 3 classifications: goods, services, and capital goods. These are the 3 classifications that have basically done. Now coming back to our definition here, goods and services. This is what we are dealing with. Now, why is this classification required? I will give you one simple example. We have said that goods means anything which is movable. Anything which you can move, it is goods. Let's take this example. I am going to a restaurant. And I am ordering masala dosa. I want to eat a dosa, so I have ordered for masala dosa. What is he giving me? He is basically taking his atta, the batter. He is doing some activity. So in other ways, he is manufacturing barter in is manufacturing the batter into a dosa. Okay. dosa has come. So he serves me on a plate with chutney and sambar along with it. I eat, pay the bill and go. Now, what did he sell? Did he sell goods or did he sell service? Generally, we say, okay, it's a service. But you generally don't go to a hotel because how beautifully he is lifting it from the stove or and putting it on the plate, or how nicely he is putting it to my table. You go to a hotel because the quality of food, the taste that you like it. In a theoretical words, is that a food which is movable? Yes. Should it be goods? Yes. But from the classification perspective, Schedule 2 says it should be classified as service. So likewise, there has been classification which has been brought in. So let's quickly understand. Whenever there is a title in goods is passed on, then it will be treated as goods. So I am dealing in mobile phones. When I sell the mobile phone, it will be treated as supply of goods. But I am not selling the mobile phone, but I am giving it for say rent usage. So the title is not transferred. Whenever the title is not transferred, it becomes service. It becomes service. So for it to become goods, the title should be transferred. For it to become service, the title is not transferred. Like a property, sale of a property is outside the levy, but I will not sell the property. I will give some rights in the property. What are the rights? A right to occupy, tenancy right, easement rights, lease, various things. When you give those rights, it becomes service. It doesn't become goods. So likewise, this classification has been made. So just to sum up the definition, the supply, we have three things to be knowing along with section 7. Section 7 is the mother definition for the levy. So for levy to happen in GST, there should be a supply. Supply has to have consideration. Exception to it is schedule 1. Even though there is no consideration, it's a supply. Exception to section 7 supply is schedule 3. Activities listed in schedule 3 are neither supply of goods nor supply of services. Lastly, schedule 2 to be read as supply of goods or services classification. So friends, this is all about supply. So next, before I move on to the next thing, which is types of supply. Let's see the questions. What is surcharge and cess in GST? Tejaswini madam. Madam, there is no concept of surcharge, but there is a concept of cess. So under GST, we also have a compensation cess. Owing to implementation of GST, some states would have lost revenue, some states would have gained revenue. So just to ensure there is an equality, so government has to compensate the states. So in order to compensate the states, they brought in this compensation cess, and this cess is levied on sin goods basically. So that is tobacco, cigarettes, all those products, and it is also levied on luxury items, which is like car and other things. So there is a cess that is levied. Someone was saying that my voice is becoming low. Is it okay now, Rajesh?
Yes, sir. It is okay, sir. It is okay.
Sir, one question from me, like, what is the compensation cess rate, sir? Is it differ from product to product, or it's a uniform rate?
Sir, it is not clearly audible. Who is this?
So the compensation cess, is it,
Yeah.
what is the rate of compensation cess?
So there are two types of cess, ad valorem, non-ad valorem. Each product to product, basically under GST, the only thing one should not be learning is the rate of tax, because the product to product it changes. Likewise in cess also, for example, a tobacco, based on the length of the stick, there is a fixed price. So 50 rupees, 100 rupees, 300 rupees like that, that is also there. And ad valorem, which is like based on the value of this, they may say that, okay, 30% is this cess. So the GST rates are fixed. There are defined slabs. But for cess, again, there is a schedule. I will again briefly touch upon it. In that schedule, the rates have been defined. Question from Savitri Madam, will you share the PPT? Yes, it would be shared. Shakila Madam, kindly repeat likewise means. Sorry, I forgot the context. When did I say this? Maybe if you can put out the question, I'll explain it. Then there is a explain ITC with simple example. Gautam sir, there is a session on ITC. Don't worry. With a detailed discussion will be there. Employee as a supplier. Question from Girish sir. Sir, question is not complete. Okay. These are the questions. Let's move to the next aspect. There are various types. Whenever we say supply, this is not something which is defined in the law. This is not something which is defined in the law. But from the different perspective, I thought you should be understanding the tax types. The word supply can be interpreted as. From the tax treatment, I can call it as zero rate supply, exempt supply, non-taxable supply, taxable supply. That is based on tax treatment. Then one is based on nature. A composite mixed, what is it? Then nature based on jurisdiction, intrastate. Then based on the recipient, inward supply, outward supply. Very important, which we'll spend more time, is based on the levy, whether it's a forward charge supply or a reverse charge supply. So these are the various things that we are going to discuss now. Begin with tax treatment. Okay. We have this word called zero rated supply. And zero rated supply is defined under 223 is whatever is the 223 of IGST Act. Okay, wherever if I do not specifically say it as IGST, you should read it as CGST Act. Like in the goods, when I said 252, it is 2 subsection 52 of CGST Act. Services 2 subsection 102 of CGST Act, or respect to SGST Act. Okay. Now, zero rated supply means any of the following supplies made both goods or services, export of goods or services, supply of goods or services to an SEZ. This is called zero rated supply. Okay, what is the importance of zero rated supply? Government to give some benefits and concessions to exporters or the SEZ units. They have made it as zero rated supply. Why do we call this as zero rated supply? When a supply is treated as zero rated supply, whenever I am exporting, people say when you are exporting, you do not have any rate of tax. Exports are exempt. Exports being exempt is a wrong word to be used. The right word is it is zero rated supply. So there is a rate of tax. If I am exporting this mobile phone, the mobile phones has this rate of tax as 18%. But when I'm exporting it, the rate of tax is made to zero. That is why we call them as zero rated supply. Then the next one is which we need to know is export means. In case of goods, physically taking goods from India to a place outside India. In case of services, I am here in India, service provider, recipient is there outside in India, and the place of supply, which I think Hanish is taking on that. The place of supply is outside India, and I'm getting it into a convertible foreign currency, that would be treated as export of service. Then exempt supply, we are going to deal it in very detail, but exempt supply means something which is exempt from tax. It is leviable to tax. It is under GST, but government chose not to levy tax. Say rice. Rice is an exempted product. So when it is exempt, then there is no GST levy. Then nil rate of tax, where the rate of tax has been given, like I said, 5%, 12%, 18%. Likewise, when rate of tax has been given as 0, nil, that will be nil rate of tax. So difference between nil rate and 0 rate, in 0 rate, rate of tax is not 0. That is made to 0 because you are exporting it. Yeah. So that's the difference between nil and exempt. Then lastly, a non-taxable supply. What is a non-taxable supply? It's a supply, but not to be taxed. We schedule 3 items. Like schedule 3, we said it is a supply, but it is not to be treated as a taxable supply. Then there are certain items which have been deferred for levy. I said there's 5 alcoholic petroleum products. They are outside the levy. They have to be treated as non-taxable supply. So non-taxable supply is which is not leviable to tax under GST. We call that as taxable supply. And lastly, taxable supply means supply of goods or services and or both, which is leviable to tax under GST. Then the next classification is based on nature of the supply. So there are 3 things: mixed, composite, and independent. Mixed, composite, and an independent supplies. What is a mixed supply? Let me give you an example for it. Today, businesses are complex. They are rather than complex, I will say creative. Now, when there are multiple supplies happening under single supply, what do we call that supply as? When there are multiple supplies happening under a single supply, what do we call those supplies as? So in GST, we have a rate of tax for each product. Product is defined by HSN. So there is a HSN. HSN is harmonic system of nomenclature which is adopted by customs, identifying a rate, identifying a code for each product. We have 8-digit HSN, totally 99 chapters. 01 to 98 deals with goods, chapter 99 deals with services. What is a mixed supply? When 2 or more individual supplies, are combined thereof for a single price, and it is not a composite supply. For something to be a mixed supply, it should not be a composite supply. I will come back to this with an example after looking at what is a composite supply. Composite supply means a supply made by a taxable person comprising of 2 or more supplies, a very important word, which are naturally bundled. So if there is 2 or more supplies, which are naturally bundled, and the last thing is they are supplied in conjunction with each other, and one of it is a principal supply. So the conditions is there is one principal supply, there are 2 or more supplies made together at the same point in time, and they are naturally bundled. Let's take the example of our own profession. Now we find colleges which are a day scholar and a residential. Now there could be a fixed price. For example, the package is 5 lakhs. What does 5 lakhs would include? Let's say your 1 year tuition fee, your single room accommodation, your food, your books, materials, your dress materials. If this is bundled and we say 5 lakhs. Now college is collecting 5 lakhs. What is it supplying? What is it supplying? There is no bifurcation. They did not make 2 lakhs towards college fees, 2 lakhs towards hostel fees, 1 lakh hostel fees, 1 lakh food, 50,000 books, 50,000 dress material. They did not make any segregation. They just gave this 5 lakh. Now, there are multiple supplies which are bundled together. So whenever there are multiple supplies bundled together, it is important to identify what is the supply. Why? Accommodation is a different HSN, different supply, different rate, 18%. Food, different supply, different rate, 5%. Training services, 18%. So we have different rates. Books, reading books exempt, other books are at 12%. Dress materials, 12%. So we have different rates. But right now I have bundled everything for a single price. So when this happens, we need to identify what it is. Is it a composite supply or a mixed supply? Something which is naturally bundled, it is called composite supply. Something which is not naturally bundled, it is man-made bundled, then it is a mixed supply. Another example of composite supply. If someone is treated in a hospital, he is admitted to hospital 3 days, he got operation, treated, then discharged. If you look at his bill, there would be operation doctor charges, there would be nurse charges, there would be luxury, semi-luxury room, whatever. Based on that, there is a room charges. Then the food has been served, there is a food charge. Then there is a medicine which has been taken, the medicine charge. Now here I am giving you little different. So you have individual itemized bill. In the earlier example, school, it was one bill. Here now you have itemized bill. Even though you have an itemized bill, they are all billed together in conjunction. They are billed together in conjunction together each other. And one of it is a principal supply. Total bill is say 2 lakhs. The doctor charges is only 20,000. Still, the principal supply is the doctor charges. The whole of the supply, the food, accommodation, nursing, medicine, everything is treated as if it is supply of a principal supply. As if it is treated supply of a principal supply. Now let's come to the mixed supply. Let's come to a mixed supply. Mixed supply, on contrary to it, we are saying that something which is not a composite supply. So which does not constitute a composite supply. Let's take a simple example. You go to Big Bazaar. You find a surf packet, a bucket, a Lysol floor cleaner, a broomstick. They are all bundled together and it would be written as offer price 200. Individually, if you buy them, it is 250. Now it is offered as 200. So it is being sold for a single price. Now what is it? Is it the 200 when I have to pay GST? Should I treat it as bucket? Should I treat it as broomstick? How do I split? I can't split. I can't make any assumption. So the first and foremost, is it composite supply? Is it naturally bundled? No. Each one can be sold independently. So when something can be sold independently, but it is not sold independently and sold together, it is a mixed supply. In the earlier example of the college, I cannot sell the accommodation, like I cannot Say, okay, you study in some other college, but you can come and stay here. Or you stay also somewhere, you come here and eat food. Or you eat food, but you just come here and buy dress, nothing happens. It's like you have to sell in conjunction with each other. So that is a composite supply. But here you have an option to sell separately. When you are not selling separately, but you are selling it together, then that would become a mixed supply. And when there is a mixed supply, the rate of tax for that item, or what is that item? Whichever is the item which has highest rate of tax, whichever is the item that has highest rate of tax, that should be treated as a mixed supply. I hope you have understood both composite and mixed supply. Then there is something called continuous supply of goods and services. Sometimes the supply do not terminate immediately. It takes time to terminate, whether it is goods or services. For example, say newspaper. Newspaper every day is selling to you, but you have a contract to supply, say 1 month. He gives you bill end of month. Under GST, invoice has to be issued on or before removal of goods. But in this case, he cannot give you invoice every day. So there is continuous supply of goods. Likewise, service. Airtel is selling you airtime. Now this airtime, they cannot truncate every day. Raise a bill. There is a billing period. 23rd of this month to 22nd of next month. Like that, there is a billing period. So Airtel has continuous supply of services. So there is a situation where there would be continuous supply of goods or supply of services. Now, the levy of it, the time of supply of this continuous supply of goods or services will be dealt by the tomorrow speaker, but you should be aware sometimes the supply could be composite, mixed, or continuous supply. In case of composite, it is treated as if it is a supply of principal supply. In case of a mixed, it is treated as if it is a supply of highest rate of tax. In case of continuous goods and services, so whenever there is a periodical payment or the statement is there, at that point it has to be billed. Let's see if there are any questions at this point. Difference between a zero rated and exempted. Zero rated is only exports and supply to SEZ. Exempt means specifically exempted, which we will see in a while. Suchitra Devi Prasad, please give one example for good which fall under exempted supply category. Madam, supply of rice. Rice is an exempted. Supply of vegetables, they are all exempted goods. Even after charging customs, is it necessary to charge GST on imported goods? Yes. Both are two independent things. Customs is a different levy altogether. GST is a different levy altogether. Next, based on the jurisdiction. There are two types we will call. One is intrastate supply, another is interstate supply. Intrastate and interstate supply. So in case of intrastate supply, let me just correction. In case of intrastate supplies, it is supply happening. It is a supply happening between the same within the same state. If it is a union territory, within the union territory. Of course, it will not include in Karnataka to an SEZ in Karnataka, it is not intrastate. Or if I am importing goods from Singapore to India, not import of. Or if I'm giving a supply to a tourist, it is not the import intrastate. Intrastate means supply within the state. Then we have another thing, interstate supply. Interstate supply. There is a location of the supplier, the selling person and the place of supply. Generally, place of supply is location of recipient. Wherever the recipient is, that is the place of supply. So there are two different states. I am selling from Karnataka. You are there in state of West Bengal. Then it is interstate. I am in Karnataka sending it to Daman and Diu or Pondicherry. So state to state, state to union territory to another union territory. Then it will be called as interstate supply. And it would also include import of goods or services, export of goods or services, and supplies to international tourists. So why this bifurcation? If it is an intra-state supply, if it is a local supply, the levy we are going to do, the levy is going to happen is CGST and SGST. The levy that is going to happen is CGST and SGST. If it is interstate supply, the levy that is happening is IGST. So between states to states or states to UTGST, it is IGST. Within the state, the levy we call it as CGST and SGST. Let me look at the questions. Then based on the recipient, inward supply or outward supply. Erstwhile, we use word called sales and purchase. We use this word called sales and purchase. But in GST, there is no sale, no purchase. Purchase is renamed as inward supply. Goods are coming here. Sales is treated as outward supply. Sales is treated as outward supply. It means like sale, transfer, barter, lease, license, rent, all these words, adjectives will be treated as inward and outward supply. Then the last one is based on levy, a very important aspect of the supply. 9 of section 9 of CGST Act. Again, this is a charging section. There is going to be a levy that will happen. So it says 9 subsection 1, a levy of CGST. In CGST Act, it says CGST, SGST Act, it would be saying SGST. There's a levy under IGST and UTGST also. On all intrastate supplies, because it is CGST, it says intrastate. So on supplies, on the transaction at a value at a rate less than or equal to 20%. So with a rate which is notified by the government. So 9 subsection 1 is the primary charging section. I'll deal with it little in a while. We call it as forward charge. We call it as forward charge. Next, the CGST on the petroleum products, the 5 petroleum products is again deferred to a future date. 9 subsection 2. 9 subsection 3 and 4 is a reverse charge on notified goods and a reverse charge on purchases made from an unregistered person. Is 9 subsection 3 and 4. So one has to pay the taxes. Last one, 9 subsection 5, e-commerce operator. Now let me give you a clarity between forward charge and reverse charge. Now, for example, firstly, you all should know under GST, who is the one who is paying taxes? It is always buyer pays the taxes. It is always buyer pays the taxes. If you think the seller is the one who is paying the taxes, it is a myth. Seller is only collecting the taxes. Let's understand the forward charge. We have a buyer, we have a seller, and we have the government collect the taxes that needs to be paid. What happens in a forward charge? In a forward charge, seller sells the goods. The goods are being procured by the buyer. For buying these goods, buyer, let's say 100 rupees is the product value and 18 rupees tax amount. So what does buyer do? Buyer makes a payment of 118 to the seller. He is paying the seller. What is the seller doing now? Seller keeps 100 rupees with him and he pays 18 rupees to the government. Seller is paying 18 rupees to the government. We call this as forward charge, where the seller is collecting taxes from the government, from the customer and paying it to the government. 9 subsection 1. Then comes reverse charge. In reverse charge, what happens? In a reverse charge transaction, as usual, seller is making the supply of goods. Now, this 118 which needs to be paid, buyer is splitting into 2 categories. He is paying 100 rupees to the seller and seller is going to keep it. He is not going to give anything to the government. Buyer himself is directly paying taxes to the government. The 18 rupees which needs to be paid, the buyer is paying to the government. So the earlier slide, what we have seen is 9 subsection 1. What we are seeing is 9 subsection 3 and 4. That is reverse charge, where the buyer has to pay the taxes to the government directly. What is this reverse charge? Why reverse charge? Now there are many situations where government do not want to tax or bring seller into the picture. So let the buyer pay the taxes. For example, GTA, Goods Transportation Agency. These are trucks, unorganized sector. Instead of taxing the GTA, asking him to pay, whomsoever is buying the services from GTA, let them pay the taxes to the government. Like that, government has listed. Notification 13/2017 of Central Tax Rate has a list of all services where the recipient has to pay the taxes under reverse charge basis. Then the last of it, 9 subsection 5, is a deemed supplier. Now here is a situation where government will specify a category of services. Please note it is only services, not goods, on which the tax shall be paid by the electronic commerce operator if the services are supplied through it, and all the provisions of this act shall apply to that operator as if he is the supplier liable to pay tax in relation to such supply. Again, the example which we can think of here is Ola, Uber. There are 4 lakh cars that are plying for Ola in the state of Karnataka. Imagine in across India there would be multiple. Instead of taxing all these the taxi drivers, what the government said, let us tax the Ola as if they are the one who is providing service. Technically, Ola or Uber do not own a single vehicle. They have the driver is the one who comes to your house. He picks you. He drops wherever you want to drop. He collects the money, or sometimes you pay it through wallet, whatever. What is Ola doing? It is just an e-commerce platform. It has an internet. He beautifully developed a software to connect. So instead of levying the tax on the drivers, the government said, let us levy the tax on the Ola or Uber as if they are the one who is supplying. Make my trip, owe your rooms. All these people come under this category. So friends, we have addressed the supply also. So we have come to the last part of discussion, which is exemptions. Let's see if there are any questions until now. How can buyer pay taxes directly to the government without having registration? Sir, in case of 9 subsection 3 and 9 subsection 4, it is attracted to only registered buyers. So the buyer is expected to register. So a business entity who is registered would be paying taxes to the government directly instead of paying it to the seller. Question from HKS. Damages received for illegal occupation or usage of the property rights. Can it be considered under supply? Yes. There was some act that happened and you got a compensation for it. So 90% it would be coming under the perspective of the levy if there is a supply wherein you have tolerated it to happen. Then yes, there would be a levy that happens and it would be treated as supply of services. Question from Vijender Shenoy. What about UTs with legislature, SGST or UTGST? It is UTGST. Exemptions. The last part of today's discussion, exemption. Exemptions would include supplies that attract nil rate of tax, where the rate of tax is 0. Or, very important, supplies which are wholly exempt from tax. Under CGST it is section 11, under IGST it is section 6. And a non-taxable supply. What is it? Wholly exempt. The exemption can be, a government can give an absolute exemption or a conditional exemption. In case of an exceptional nature, they also have a power to give a temporary exemption. From this day to this date, I am exempting. That is also there. And they also have a power to exempt retrospectively. Tax rates are always prospective. The date when it is notified, from that date only it is taxable. But exemptions can be retrospective. It can be from a earlier date also. Mandatory answer is yes, it is mandatory. What is that? Okay, let me also tell you certain important notification. People were asking rate of tax. To know rate of a tax of a product, if it is taxable, you have to refer to notification 1/2017 central tax rate. If you want to refer to the list of items which are exempted, then the goods you have to refer to notification 2/2017. 1 for rate of tax and 2 for notification exempted goods. No problem. Then in case of services, rate of tax for services has to be referred in 11/2017. Exempted services have to be referred in 12/2017. Then goods which have been imported by SEZ developer under 15/2017, they are also exempt. Let's look at what are the goods that are exempted. See, there is a lot of list of items. There are a lot of list of items which are exempted. But the objective of exemptions is to understand category wise broadly, just to know what it is. Again, rate of tax, you need not understand bifurcate because they change time to time. Exemptions, they exempt and notify. You need to have a broad idea. Even from the academic perspective, no one will ask that what is the rate of tax for a mobile phone in the exam or the question paper, because that's not the anything that can be derived has to be looked at, but anything should be understood, definitely it has to be read through. Okay, if I have to give you some examples, what the common man need is food items, various items given exemptions, so they are not linked to taxes. When it comes to services, there is a laundry list of services, a huge list of services, difficult to remember and digest, but I'll briefly walk it through in 5 minutes. Again, this presentation is available. You can leisurely go through. Once you get the concept, it will be very simple. I have categorized into various things. One is supply from government, then the transportation, education, essential services. So I've given into various categories for ease of understanding. When it first comes to exemption by charitable institutions, are charitable institutions covered under GST? Yes, they are very much covered under GST. Just because they are charitable institutions, you cannot think that there is no GST. GST is applicable. So because GST is applicable, the government said if they are a 12AA registered entity, if they are a 12AA registered entity and they are doing charity activities, it should be both. It is a condition has to be read both. It has to be a charitable institution. It has to be a 12AA registered entity. Then whatever it is doing, it is exempt. It is doing a charitable activity, but not 12AA, not exempt. It has a 12AA registration under income tax, but it is selling some stationery items. It is selling something which is not listed in chargeable activity, then not exempt. Then in case of religious places, where like you can take the example of Tirupati. When you go to Tirupati, you pay entrance ticket. For the entrance ticket, you have to pay GST. Is the question, because is it a supply? What supply they are giving? They are giving you supply of deity darshan. It's like you are getting some blessings of the god. It's also supply. Or they are selling you laddu. You are staying there. They are giving you accommodation. They are collecting money. People go there and get married. So there are kalyan mandaps. They get the fees. Alongside of the temple, you will see a lot of shops. Those shops are there that they pay rent. So the government said, whatever is the money paid for conducting religious ceremony, it is exempt. Whatever the money paid. So you do one Kalyanotsam where you pay some 1,100, 5,000 or whatever darshan ticket you are doing, exempt. Then if you are staying in a room, up to 1,000 rupees per day, exempt. In Kalyan Mandapam, if you are doing some activity, 10,000 rupees per day, exempt. If you have a shop where the shop rent is 10,000 per month, exempt. So like this, if a religious institution is doing something, they have given the exemption. Then transportation of passengers. In case of air, air travel is taxable, but the airports located in these places, both if someone is embarking, boarding or termination happening in these places, to promote the airports in the located there, they have given exemption. All those eastern states and in the state of West Bengal, Badogra. That's only because that's like connecting to Assam and other places. So they have given the exemption. In case of travel by road, if it is a non-air conditioned bus, then it is exempt. And stage carrier, that's also given exemptions. Stage carrier is like ticket, you give one ticket to another ticket. The exception to it is if you are conducting tourism, like you have the state promoted tourism, people come to Bangalore, they take KSTDC, go to different parts of Karnataka and come. AC, non-AC, it doesn't matter. If it is a tourism activity, it is taxable. Then in case of rail transportation, second class, other than first class and AC, everything is exempt. First class and AC is taxable. Metro rail, monorail, tramways exempt, inland waterways exempt. So public transport exempt. Metered auto rickshaws, cabs where there is a meter there, that's also exempt. This is on passenger transportation. In case of a goods transportation, if it is by road, except by services of a GTA, it is exempt. Other than GTA, what is GTA is someone who is giving consignment note like BRL, all these agencies who give you a token of what they are supplying, it is taxable. Who is GTO, transport operator? It is like you purchased, you went to a market, you purchased items. When you came out, you saw one vehicle. So you tell them, okay, please go from here to drop it at my shop and the other place. He is not concerned. He doesn't give any bill. So all these roadside truck operators, their services are completely exempt. Inland waterways exempt. In case of air, goods generally move from custom station to another custom station. So when they are moving from place outside India to India is exempt, and from customs clearance place to a place outside India, it is exempt. Like you are moving outside the geography of the taxable territory, it is exempt. Same applicable to vessel also. And for rail, goods are taxable except the items which is listed. So there are category of items which have been listed. If these goods are transported by rail, these goods, the transportation charges which is levied by the railways is exempt from GST. In case of services of GTA, I said GTO is exempt, GTA is taxable. In case services of GTA, whatever the items which I have listed here, if they are carrying that, that is exempt. Apart from that, if the whole of the truck consignment charges is 1,500 rupees, it is exempt. The consignment charges for the truck is more than 1,500, but individual parcel charge is not exceeding 750 rupees. Then also it is exempt. And whenever any service is given by government or governmental authority, that is also treated as exempt. The services which is given by the government excludes postal department, air transportation, passenger transportation. So other than these, every other service provided by the government is exempt. Just because there is a government organization doesn't mean that GST is not applicable. GST is applicable to them also, because they are also a business institute. They also have income tax and everything. So they have given an exemption activity. Certain things I'm just keeping, which then services given to government. If you are providing a service to government, if you are providing a services to government, if such service is in relation to a function of panchayat or a municipality, then such service is exempt. Then such service is exempt. Then pure labor contract. Construction of a house. Construction of a single house. I am a builder. I am not constructing and selling. It's like I don't own the land. You have a land. You are engaging me to construct. I bring my labor and construct and give. Then no GST. If I only buy steel, cement, material, you are giving me full contract and I'm constructing, then it is taxable. Then bank. What does bank do? Bank give lending interest. So the interest income. If they start GST on interest, then again cascading complication. So they said the interest income earned by the bank is exempt. In case of a credit card transactions, there is a bank facilitator in between. If the transaction value is up to 2,000 rupees, so those companies have this surcharge, they may charge 1%, 2%. Those fees is exempt. Then insurance companies. All the services provided by the insurance companies in terms of life insurance, which is under annuity plan, is exempt. Not that everything is exempt. One should be knowing annuity plan of the national pension scheme is exempt. General insurance, only HUT scheme, some which are very specified, are exempt. So what insurance, life insurance is exempt is Janashri Bima Yojana, Aam Aadmi Yojana, very limited schemes which is more towards poor and the needy related. They have been given exemption. general insurance also, as I said, heart insurance, cattle insurance, tribal insurance, group medical insurance for self-help group. So all these you can find it more towards the lower and lower income category of the people. Those category of insurances are exempt. Then comes educational institutions. Again, service provided by educational institutions are exempt, provided that service is to a preschool and up to higher secondary. 10+2 is exempt. After 10+2, it has to be a curriculum obtained or recognized by any law timing in force. So it cannot be, I am doing a specialization in Veena, musical instrumental learning course. It cannot be, even though someone is teaching, it cannot fit under this exemption. And it has to be provided by educational institution. It has to be provided by educational institution. It can be, I have a coaching center. I am teaching class 10 students, class 12 students. Even though it fits under the category of the education, but I am not an educational institution. Educational institution means someone who should have a valid license to issue degree, certificate, whatever, only they come. So which means an approved colleges will come fit under these exemption notification. And the services by educational institution to its students, faculty and staff by way of entrance examination is also exempt. Then services to an educational institution. So I am not an educational institution. I am providing transportation. School do not have transporting. I am doing the school transporting, or I am giving food. I am doing security cleaning. I am facilitating conducting the exams. So when I do these services to a school, it is exempt. If I do the same services to a third party, they are taxable. But if I'm doing to a school, it is exempt. So the exemptions could be qua supplier, qua recipient, qua nature of supply. So it could be any of the nature which we can think. Like education done by this 10th class student for a private coaching is taxable, done by the school is exempt. So the supplier perspective. Here I'm a caterer, I'm giving it to the school, it is exempt, but I'm giving it to a company, it is taxable. So here it is co-recipient. So we have to see exemptions under various categories. Healthcare services provided by a hospital, which is called it as clinical establishment, is exempt. All services except beautician related activities. So face upliftment, dental services, cosmetic and plastic surgeries, leaving that everything is exempt. Then unincorporated bodies, basically resident welfare associations. We live in apartment. We generally the apartment collects every month 2,000, 3,000, 4,000, whatever the amount as maintenance fees. Let's say if I have 100 apartments and 3,000 rupees is being collected. So every month 300,000, which is 3 lakhs, is being collected. In a month it is becoming 36 lakhs, more than 20 lakhs, which is limit. Even though it is more than the 20 lakhs limit, they have to pay GST. They said up to 7,500 rupees per member per month. If you are collecting, then it is exempt. Beyond that, if you are collecting, then it becomes taxable. Then there are various other categories. The residential renting is exempt. Storage of rice is exempt. Toll charges for accessing the weighing bridge is exempt. Electricity distribution, these are the various categories of other exemptions which have been listed, so, which is very self-explanatory. I'm not getting into detail. So basically, these are the various aspects that we have discussed. Basics, understanding what is GST, what is went out after GST, what came in, what type of taxes that are levied, what is the supply, what are the different types of supplies and exemptions under GST. So this, I have come to end of my presentation, and let us look at the questions that if any we have.
Sir,
Yeah.
Yeah.
Sir, Rajesh sir, can I ask?
Yes, please, sir. First preference to you.
Yeah, thank you very much, sir. Sir, Vimala sir, very nicely presented, and I get a lot of clarifications, whatever the doubts I had in these sections of GST. Now, I have a basic question on a registration aspect. I think I'm going out of in today's discussion. Anyway, for the benefit of all of us, the whole gamut of this GST begins with the registration.
Correct.
So the threshold limit is 20 lakhs or 40 lakhs, whatever the case may be, or 10 lakhs, whatever the case may be.
Correct.
So now a trader or a taxpayer, assume that he does business for a whole of the year. Somewhere in the mid of the year, he reaches to 20 lakhs or 40 lakhs. Should he pay tax on the entire 40 lakhs, which he have done earlier to registration, or only prospective?
Okay. So GST is applicable on every rupee from the day of registration or from the day is liable to register. For example, in the given case, during the middle of the year, he has crossed 20 lakhs.
Yeah.
During the middle of the year, he has crossed 20 lakhs. Let us take two scenarios. He has obtained the registration when he has touched 18 lakhs. Then he would be paying GST from rupee 18 lakh 1 onwards and not from 0 to 18 lakhs. Case 2, he has obtained the registration at 22 lakhs. Then he will be paying GST from rupee 20 lakh 1 onwards and not from the time when he is registered. So from the point at which he is registered or liable to be registered, he will be paying GST and not the past amounts.
Yes, sir. I have
Once it's registered, from the next year onwards, from the rupee one, he will be paying.
I have another question related to supply, sir. See, in case of gifts which are given to the employees by the employer, we know that it is exempted up to 50,000 rupees per employee.
Correct.
Suppose in any case, an employee is working with a company or employer for quite some time, and out of the loyalty of the employee, employer keeps giving away gifts throughout the year on different occasions. Say in a year, in certain year, it happens so that till December, he had given something like 49,000 rupees gift put together for the entire period.
Right.
And in the month of March, he gave another 20,000 rupees. Now the total amount crossed 50,000.
Right.
Should this entire amount be treated as supply without consideration or what?
Yeah. So not the entire amount, the value that exceeded 50,000 rupees. The value that is exceeded 50,000 rupees will be considered as the supply by the employer. Up to 50,000 rupees, we have got a blanket exemption. Over and above 50,000 rupees is what the levy happens.
Right, sir. I'll take your time a little more because I have another 2-3 questions.
No problem, sir. Please, that would benefit others also. I have, I definitely have time.
Thank you, sir. Thank you very much. So suppose a holding company transfers some business assets to a subsidiary company without any consideration. Should it be treated as taxable supply?
So firstly, I'm presuming both are in India. If they are not in India, definitely it is leviable to tax. The second thing, when a holding company is transferring these assets without consideration, the point has to be seen is, did the holding company has availed input tax credit or not? If the holding company has availed input tax credit, no doubt it is a supply. Again, it has to be treated. The last thing, even though there is no consideration, because they are related persons, the first entry in Schedule 1, is applicable for related or not related. It is a business asset which is transferred. But the second entry, it says the transfer happened between related persons or distinct person. Distinct person means say my own branch. Related person means holding and subsidiary.
Yeah.
Even though there is no consideration, GST has to be paid.
So one more, sir. Yeah, you even dwelt upon something like principal and agent supplies. Okay, transfers. Now, supply made by the principal to agent, and which is meant for in the furtherance of the business, and agent uses some quantity of that supply for his personal use. So how this should be treated as?
Okay, so whenever the goods are withdrawn for the personal use, that is again deemed as supply. Whenever the goods are withdrawn for personal use, that is deemed as supply. I'll give one simple example. Let's say we have like Pepsi and Coca-Cola. Okay, I'm an agent of a Pepsi. What is my role? I have a godown. Pepsi says these are the list of the shops where you have to deliver. So they gave me a list. I have 100 crates I have delivered. Against each crate, they say 8 rupees is my commission I get. Even though 8 rupees is my commission for the purpose of income tax, books of account, for the purpose of GST, let's say the value of each crate is 1000 rupees. So since I have delivered 100 crates, and 100 into 1000, which is 1 lakh, should be treated as revenue for the purpose of GST. So Pepsi has to bill me for the purpose of GST 1 lakh invoice, and I will have to bill it to the end customers who are all those dealers to whom I have supplied. So it is, even though those dealers might make the payment to Pepsi directly, and Pepsi gives me only that each crate into 8 rupees, whatever be the amount. So I have to do it on a gross basis. Now, doing it on a gross basis, let us say I have hosted a party in my office. I have consumed, I have hosted a party at home. I have taken these goods to my home. I have taken it for my personal purpose. Even though I am a proprietor, I am not going to pay any money. I would be generally it would be debited as to my drawings account. But for the purpose of GST, it should be like treated like as good debited to any debtor. GST has to be discharged, even though the goods are withdrawn for personal use.
Sir, one more. Rajesh sir, please excuse me, please.
Sir, pleasure to answer questions. Please go ahead. Renu sir will answer everything.
Thank you, sir. So suppose L&T has undertaken a project for prospecting oil resources in Bahrain. L&T have taken a contract to build those assets. Okay, it prepared the entire plan and other things, project report, everything here in Bangalore, and supplied it or sent it to its own project site there in Bahrain without any consideration. It did not charge for the drawing and other details or project report, etc. So how this should be treated as?
Yeah.
Is it taxable? If it is taxable, then under which law it has to be charged to taxer? Because two different countries are involved.
Right. So L&T India is providing some services to L&T Bahrain, drawing whatever be the services, and L&T Bahrain has not paid any consideration. Since there is no consideration, no supply, answer is no. It has to be treated as supply. It has to be treated as supply. It's just that if it is from India to outside India, we treat this as export of goods or services. We treat this as export of goods or services. Supplier is in India, L&T in India, recipient is outside India, L&T is the recipient, L&T is in Bahrain. Then place of supply. So generally place of supply is where the location of recipient, or if it is an immovable property where the property is coming in. So it is there. So it fulfills most of the consideration. It should fit as export of services and claim this benefit of zero rated supply, where the rate of tax can be 0 as against 18. Unfortunately, in this example which you have given, the consideration did not come to L&T India. To fulfill zero rated supply for services, the convertible foreign exchange should be received in India. So L&T India has to pay tax at the rate of 18%, even though they did not get any money. They compute this. So artificially, for the purpose of remitting taxes, they say this is my turnover. In the books, it will not be there, but for the GST, that turnover would be there.
Sir, one more. How this tenancy rights or pagadi treated, sir?
Yeah. So tenancy rights and pagadi, if it to the extent it is interest-free deposit and refundable deposit, it is outside the levy. But sometimes the people can collect a non-refundable deposit. Non-refundable deposit has to be treated as if it is a rental income. And some of this, the deposit, they would adjust towards, let's say, someone who is leaving. At the time they leave, they adjust 3 months rent or painting charges, whatever. So the portion which they have offset and treated as an income, it should be taxed. And the portion which is returned back to the tenant, it is not to be treated as any GST applicability.
Sir, you spoke about actionable claims. I get to know only one or two examples of it. Can you just give us a few more examples of actionable claims, sir, so that we can have more clarity on it?
Sir, actionable claims are the best example I would talk is vouchers. Basically, this actionable claim is dealt in your Transfer of Property Act. What is an actionable claim, where there is a levy or not, is clearly explained in. Basically, it is a claim that is arising and you do not have any ownership of it, right? It is not a secure, it is not tangible. But this claim can be exercised in the court of law. Bills of exchange, or we have this LC and other things. See, I give an underlying document which can be enforced in the court of law, and this document is not secured or mortgaged. Those would be treated as an actionable claim, which is equivalent to money, but it is not money. And the best example to understand actionable claim is always voucher, so that you know that you paid some, you have some coupon. But with that, will you get some goods? No, you have to go encash it and make a claim of it. If that coupon can be enforced in the court of a law, it is an actionable claim. If that cannot be enforced in the court of a law, it is not an actionable claim. Like a lottery. When you buy the lottery, you don't get that 1 crore rupees. But when you win the lottery, you can go and produce this lottery ticket to claim that 1 crore rupees. So all these instruments are treated as actionable claims.
Thank you, sir. Thank you, sir. One final question, sir. I have been reading some of the circulars of GST. I happen to read a phrase which I have a lot of doubts on it. The phrase is mutatis and mutandis. What is it, sir?
Mutatis mutandis, it has to be read in the same way. It is like a legal maxim. So if I'm talking, if I'm talking about, say, export of goods, some conditions, and I'm talking about export of services, some conditions, I can say mutatis mutandis, export of goods. So I can borrow whatever which is there defined earlier. I can borrow the same thing and replicate here.
Thank you very much, sir. Thank you very much.
Sir, one question.
Yes, madam. Yes, madam.
Sir,
I think.
most of
Okay. Yes, doctor. Yes, Dr. Swaminathan. Yes.
Yeah.
Sir,
Venugopal,
you agree with me?
for the nice presentation.
Thank you.
Yeah. I have a question for you.
Ma'am, Dr. Swaminathan speaking. Can we finish him and then come to you?
Yes,
Yes, Dr. Swaminathan. Yes.
Okay, ma'am, one of the basic problem that we the teachers face in teaching indirect taxes is, suppose if we take direct tax, that is income tax, we have a definite accounting period as per the accounting concept, that we have accounting period like financial year and assessment year. And therefore, whatever the amendments that takes place, we'll be confining to that assessment year and financial year only, irrespective of the whatever the new the finance bill has been passed. But one problem, what is that we foresee in indirect taxes, that especially in GST is, like every now and then the amendments are happening and we are finding it difficult to reach out to the students. Sometimes what has happened is, I was teaching to the students like ITC, like, input tax credit, based on something. But, like students come to me and say that, sir, I have put it in Google and it is coming like this. Therefore, like, what is the definite accounting period for GST? Do we have a financial year, assessment year, something like that? Or how do we reach to the students with a specific accounting period?
Okay. So basically, even in ICA, whenever they are publishing the exam schedule, they would definitely say all the notifications issued up to this date, a cutoff date. There is no accounting period concept. There are some amendments that may come with retrospective effect. Like if you see section 50, the provision applicability of interest, whether it is on net or a gross. Later it got amended saying that, okay, retrospectively from 1st July. I would say, see, 90% of the act wouldn't change. But yes, these minor changes that would happen, there would be a cutoff timelines. Very difficult to say. No, there is no assessment year concept. There is no period concept. Let us say exemption. Some exemption would be introduced anytime GST Council meets. They would say, okay, we are exempting these products or the written filing procedure. So whenever they meet, they will implement. So nothing gets implemented on 1st April. And that is where we generally take the notifications issued up until this date would be for the law. Generally, what I have noticed in, again, most academicians and paper setting, they do not touch upon these slightly changed, like, okay, whenever you have a doubt, okay, whether this year provision or those provision, it won't be touched upon, but conceptually, broadly, concept would remain the same.
One thing, okay, can we teach the students based on the quarterly returns, like, first quarter there is because sometimes even if you want to give the specific dates for the students, like, calculate the GST payable for a given period, can we take, if not the one full accounting year, can we take quarterly basis?
So GST is always calculated generally for a month. Generally, you file the returns mostly for a monthly. So all the problems which will be solved, it will be given, okay, purchases during the month, sales during the month, and the input tax credits would also be computed for a month. That is always given for a period. All the problems will be given only for a month.
Okay. Okay, thank you, sir.
Yes, Madam Sudha, Madam, you had something.
Yeah. So here is a business to business transaction. The registered dealer will supply goods to another registered dealer, case 1. He will supply goods to an unregistered dealer, case 2. He will supply to a composition dealer. In all the 3 cases, is he responsible for levying GST?
Yes, unless otherwise, those goods have been listed under reverse charge. A very few items have been listed under reverse charge. 99, I'll say close to 100%, all the items are under forward charge. So when I am a registered dealer, I am making a sale to another registered person, to an unregistered person, to a composition dealer. My obligation is to collect GST and remit to the government. One step further, whether or not I have collected from the recipient, I have an obligation to pay to the government.
Thank you, sir.
So there are some more questions that were posted. I've compiled them. I'll be shooting them one by one.
Yes,
First question is, what is the impact on inflation in the country since the implementation?
Rajesh, I think I have taken all those questions.
Okay,
I have
sir.
taken the questions. Let me, okay.
Till
Till
who will be more benefited by mixed goods supply? Have you done that?
Till exemptions I have taken. I will just see.
Sir, why India has high GST rate?
India has high GST rate. Diplomatic question. You and I don't even get time to discuss. So it will go at the thing. They are working out to come a lower rate. I would say that the rate of tax is lower than the erstwhile regime. We had a higher tax earlier. We had excise duty. We had on top of it VAT. So excise duty we had at 12%. On top of it we had 5%, 14% VAT. We had 15%. So earlier rate of tax was much higher than 18%. Today, if we say most of the products are between 12 and 18. Earlier rate, today's GST rate is lower than the earlier rate. And time to time, if you see the rate of tax notification from on the standing on July 2017 and today, 50% of the products rates have come down because they started at one rate, and as they started seeing that okay, there can be some more benefit given, they have reduced time to time.
Sir,
Right,
one more interruption, sir, in between. Since there was a lot of debate that went on since the day of introduction of this GST, cascading effect has been done away, and the benefit is going to pass on to the consumer. Is it really happening, sir? Or is there any mechanism to check this anti-profiteering?
Yes, sir. Today, I will say there's a lot of artificial intelligence, machine learnings which have been deployed. Erstwhile regime, the chance that okay, you are going to a shop and is collecting sales tax or service tax, easy paying to the government, tracing of it was, I would say 10% traceable, 90% not traceable. But today under GST, if he has collected some tax, you have a doubt that he is paying or not paying, I will say 90% traceable, 10% not traceable. 10% of those small time people who are much below the ladder. It is like cost of finding, like every control has a cost. There might be some leakage, but substantially reduced.
Right. So, another question that is there is, services provided to a foreign diplomatic mission is taxable, whereas services provided by foreign diplomatic mission, service provided to is taxable, service provided by is exempt. Why is this? Point number one. Then services provided to is it exempted? Again, they've asked the same question.
Yeah, okay. So services provided to a UN bodies or anything is taxable. So that the government has said they have allotted the UN bodies and everyone a separate registration code, UIN number, saying that let the recipient go and claim a refund. So refund mechanism has been given to all the UN bodies because globally you cannot tax any UN things. So to ensure the smoother thing, they have given a refund to the all these foreign diplomats refund mechanism.
Okay, so the next question is, sir, if a person is a chartered accountant and he earns income from accounting and auditing services as well as remuneration for teaching CA and ICB students, are these services taxable?
Everything is taxable. Whenever there is a consideration, it is like this transaction is not taxable because no consideration like that. So rupee one attached, taxable. No consideration, not taxable.
Right, sir. The last question that we have received till now is, please tell me the duration of the GST course and how to enroll for the course.
I think it is Dr. Aziz sir or...
No, he was talking, I think he's talking about the GST, that the practitioner course, I think so. No?
I don't know.
Okay.
Duration of GST course.
Okay. Fine.
Sir, one more small. I think questions over, sir. Rajesh sir.
Yeah, please go ahead, sir. There's one more.
No. Yeah. Please complete your work.
If both the person is unregistered, then how will the tax be paid?
No levy, no registration, no GST.
Simple. Sir, one clarification. I was working for some company there. There was concept of entry tax. I think you remember. Capital machines or capital goods that entry into a particular area, that the tax was levied. And in some of the cases, I had appeared before sales tax authorities because the machines were detained, and we had to go for the appeal and other things. Now, like machines like compressors or earth moving equipment like poke line excavators or rig well or drilling machines, etc. Those were detailed. Now that entity tax is done away now. Are those services, I mean, taxes are levied again under GST in some form?
No.
It is
It's
completely
done away.
subsumed.
No separate levy.
It's completely subsumed.
Yes.
They can freely move from one border to another.
Across India, goods can be sold. Now it is with the implementation of GST, people are free to go and buy anywhere. So no CST, no entry tax. So just that the transportation is the transportation cost is the arbitrage. So they can find buyer and seller anywhere in India.
Okay. Thank you. Thank you.
So there's somebody saying yesterday also his question was unanswered. So let me take that person's question.
We should take that.
Yeah, but out of scope supplies. That's his question. What is out of scope supplies? This question is regarding out of scope supplies. I think supplies out
Schedule
of
3. Okay, Schedule 3 is a supply. Is a classic example of supply. Like I'm selling a building, it's a supply. Employee providing services to employer, it's a supply. Even though it is a supply, it is outside the purview of the GST. GST said, I will treat this neither supply of goods nor supply of service. Selling alcoholic liquor for human consumption, it's a supply. GST said, I will treat it outside the purview. 9 subsection to those 5 petroleum products, petrol, diesel, high-speed diesel, all those things. The government said, I will defer the tax to a later point in time. It's a supply, but outside the scope of GST. Then there is something which is completely outside the scope of supply also. For example, I have received a donation. For something to happen as supply, there should be a quid pro quo. So I am selling something, I am giving something. Only then it's a supply. But when that doesn't exist, like I am bringing loan, today I need working capital, I'm bringing loan to my business. It is outside the levy. So it's completely out. There is no supply in those aspects.
Then he is asking about third country sales. I think maybe high sea sales or what is meaning about third country sales.
So as I said in the example, I procure from Korea and give it in Singapore. It is like transaction happening outside the taxable territory, no supply. During the course of import, as the goods did not reach the Indian land masses, it is still on the high sea. Even then I am doing an exchange of my documents and making a sale. When the goods are outside the taxable territory, there is no levy of GST.
Sir, if a supplier sells goods to a customer and collects GST from the customer, even though the supplier is unregistered under GST because it's below the threshold limit, whether the supplier has a right to collect GST in this scenario? Questioning. If not, then what is the remedy available to the customer?
Right. So whenever you are paying GST, you are definitely when you are procuring, you are obtaining an invoice. On the invoice, supplier shall mention his GST number. If he is not mentioning his GST number, he is violating and he is not a registered supplier. If he has mentioned his GST number, you can just go to GSTN portal and enter the GST number to check whether it is valid, whether it is active, whether he is filing the returns or not. So as a recipient, you will definitely be able to know this. And lastly, government is working on a mechanism to upload the bills by these unregistered dealers ad hoc to check at their end whether these suppliers have reported these bills or not, and they will give an incentive. They have actually allocated around 300 crores in the budget to take up this project so that unregistered buyers can also report their purchase.
Sir, any other panelists have any questions? Sir, I don't see any more questions available. Dr. Ajas, anything?
Thank you very much, sir. I have too many. Thank you very much.
No.
I enjoyed interacting with sir. I enjoyed. Really, it was a joyful session. Thank you very much.
Actually, my pleasure.
Please share sir's number with me, sir.
Yeah, I do that, sir.
And all the panelists for introducing me to this, all the other fellow commerce faculties, my friends. So thank you for the opportunity, sir.
So thank you very much, CA Venugopal Gela sir, and all the other panelists. I'm sure you all had a fruitful session today. Hope to see you all tomorrow with another interesting aspect about GST. Thank you.
Thank you.
Thank you.
Yes, host, we can end the meeting.